Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rourke with Mark Knight of Farmers Keeper Financial, and we're seeing some mixed trading grain and livestock futures this morning. We'll start off over in the grains. Corn and soybeans corrected yesterday, but soybeans back up this morning, despite the fact that we're getting a little bit of clarity on these Chinese tariffs. Can you talk about where we're at, Mark?
Of course. Good morning, Michelle. Essentially what has taken place is President Trump lowered the fentanyl tariff from 20% down to 10%. And so China came out with some clarity overnight and has basically responded and lowered many ag tariffs lower. However, they did keep 10%. Well, it's really 13% total tariff for incoming soybeans. The Argentina and Brazil get charged 3%, and so we're at 10% higher than that at 13%. So we're a little bit more expensive, ballpark $1 than Brazil right now. So it's going to be tough to compete. Everybody's questioning this 12 million metric tons that China's supposed to purchase by the end of the year. How's that going to happen with where we're priced at now, with the tariffs that are in place? And really, there's still a lot of question. We've shipped them close to 6 million metric tons. Trump believes that the 12 is all new purchases by the end of the year, and China has not come out and confirmed that. So yeah, there's still some questions around that. And with soybeans rallying $1 off our lows here in the last couple of weeks, it makes me question whether we need to. I want to be bullish these markets. It just feels like a better time than we were here a couple of weeks ago, and it felt like we've just been going down for the last year, and farmers have a better attitude. I have a better attitude.
Yeah.
But there's still a lot of question. And should we, priced where we're at above Brazil and Argentina, should we expect this market to rally a lot more? And I'm kind of starting to question it.
Well, that's why I started off saying we were up despite this clarity from China, because the 13% tariff means maybe they don't buy as much of U.S. goods, U.S. soybeans in particular. And in fact, we've heard talk that China bought Brazil soybeans again this week, right?
You bet. And the market kind of, backed off on early news of that, and then just kind of ripped higher. So, and of course, we're not seeing commitment of traders data either, but estimates are the funds have been in here buying beans, especially. And so that, that can be an excuse why this market has ripped higher. I think some of the estimates out there that are somewhere around 120 to 130,000 contracts long, which, when the government shutdown originally happened, they were net about zero. So thoughts are in the market that the funds have certainly added, but we are not going to get confirmation of that until the Gov reopens.
So 1135 kind of stopped us out in the January beans yesterday, as you point out, over $1 rally. So you kind of expect that. What's it going to take to get over that level? Proof of China business, something in the WASD, what?
Absolutely. I think it's going to be tough. I mean, we've run up to that ballpark, that area, the last couple 2-3 days here, and including last night. I think it's going to be difficult to break through that. But let's be honest, the funds have a lot of money if they want to keep buying, and if those reports are true that they have added a bunch of positions, they can push us, and so that is certainly a possibility. I know that the farm community had a lot of, it happened with me and others in the industry like me that have consulting businesses that are helping farmers hedge. After the market ripped $1 higher, farmers were pretty pleased, and there's been some profit taking from that side. and they're looking for the market to dip back down 30 or 40 cents to potentially reown. So that's kind of my advice to my customers has been, I don't know that we're going to, be able to breach those levels, like you said, the 1135 area, especially given if there's not any change made to the tariff structure.
Yeah, for sure. And right now, I think China's bought 7 cargoes. Those were all bought by the government. And so we need the private crushers to step in here, and price is going to be key, isn't it?
Absolutely. Why would they buy ours? Yes, the government has stepped in, just to, try to show good faith and hopefully meet their expectations from this trade deal of 12 million metric tons. But private sector has no reason they're all going to be price driven.
Absolutely. Okay, so the corn market has been hinged to soybeans. So we also ran up into some chart resistance yesterday in the corn market. So same question for you. What does the corn market need to get above these resistance areas?
Great question. I think it's going to take probably maybe a surprise a little bit. The USDA is going to give us a WASDE report on the 14th. So that potential exists. Look, I've told my customers this for months. Whether they give us a 185, a 180, a 175, with as many acres as we planted, we have a big crop to chew through. It's going to take some time to chew through that crop. And, you saw beans rally $1 plus on the rally. Realistically, corn is about 13, 14 cents higher than the trading range that they were in before this rally started. So, corn has been very muted. I've had a lot of discussions with guys in the industry, where usually you have that western corn belt brings the dry land will really, averages 100 bushel per acre or worse in a lot of cases. It is a real drawdown on national yield. Well, yes, we had some spotty areas of Iowa that had disease issues and too much moisture, and Illinois, and so there are some problems areas, but I don't know if they're big enough to bring the yield way down where a lot of these analysts are kind of projecting now. Gotcha. So I have those concerns that the Western Corn Belt dry land is going to keep us, they had record dry land crops out that way. So a lot of piles in the West.
For sure. Well, we see the wheat market back down today after an update yesterday, but that market has had a big rally here following corn and soybeans, but also because we've heard about China demand. So is this buy the rumor, sell the fact?
I think it is. I haven't seen real legit confirmation of that yet. There's reports out there Russia's doing more to try to export more. Wheat's had a nice run. We're 50 some cents off of our lows here. Not to say that these are at great, great levels for farmers yet, but certainly better than where we were. It's followed beans, had the rumors of what was it, 7 cargoes or something like that, I think. But no confirmation of it as of yet.
Yeah, I've seen a couple of different reports. One I saw said 5 cargoes of China business, but we don't have any confirmation. Is it realistic to you, Mark, that China would be in buying wheat? I think they've lowered most of the tariffs on wheat now.
They have, but it depends on. I guess they want to look as though they are good stewards of their recent trade deal with the U.S. and are going to go out here and, hopefully, abide by what they said that they were going to do. Obviously, we buy tons of stuff from them, so a little wheat here and there and a lot of soybeans is what we need for them to do. So
the other key, Mark, is that funds were short in all three classes prior to this rally starting with 50 cents now tacked on. Did the funds keep covering shorts, or are they done?
Great question. Much like the soybean one, we're not going to know. Guesstimates are that yeah, absolutely, they've certainly covered some on a 50-cent move. Is it enough to change and get them to, they're still projected short. Is it enough to get them excited and go long? I kind of question that. I kind of question that there's a real reason to get long that market right now.
For sure. Okay, one quick question on cattle before I let you go. Core closed yesterday. We broke out of the bottom side of some of these bear flag formations. Do you think cattle have a lot more downside risk here?
I am one of those that doesn't. I mean, it wouldn't surprise me. Look, that market exploded over the last year and took us to highs that we've never seen. And I think this is the very first episode that I've done with you, Michelle, that it hasn't been setting a record. And so we've had in the last couple of weeks, we obviously had a big downswing with multiple limit down moves in there. We broke down to what I would consider a bit of a trading range. And so there's about a $15 window here of support resistance. We hit the resistance line yesterday. Let's hope the support line, if we continue to weaken, provide support. The cash side's still strong.
Sounds good. Thanks so much. Mark Knight with Farmers Keepers Financial, and that is Markets Now.
When you choose Brevant Seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant Seeds, you don't just win. You hit the damn jackpot. Don't just win. Talk with your retailer or visit Brevant.com/jackpot to get started.